Well, if you thought that 2026 would start and all of the geopolitical tensions, that is, the friction between nations, would go away magically, then you would be sorely disappointed. Because over the weekend, you had a sudden, unexpected military action by the US in Venezuela. Effectively, President Maduro and his wife were picked up by the US and taken to New York, and they're apparently going to stand trial, at least at the time of me speaking to you right now. But the question is, what does that mean for equity markets, for risk assets overall, and specifically, what does it mean for gold? That last point is what we're discussing right now. Navneet Damani, who is Group Senior Vice President and Head of Commodities Research at Motilal Oswal, joining me right now. Navneet, we've spoken often over the past 6 months or so about gold, and every time we've talked about the potential upside. So before I get to that, let me wish you a very happy new year. And let me start by asking how you think gold is poised as things stand right now for the rest of 2026.
Well, thank you, Alex, and wishing everybody a happy new year. We started the year, it is exactly a replica of how 2025 started. It also started with the geopolitical tension around the corner, with President Trump coming on the hot seat, imposing tariffs, then renegotiating tariffs. And through the year, we saw some kind of momentum in terms of not only but geopolitical stress, geopolitical tension, but de-dollarization, de-escalation, escalation, and these are the buzzwords for larger trend of 2025. But to our surprise, 2026 started the bang with the US and Venezuela event. Now, gold doesn't need any kind of geopolitical tension or stress at this point in time. Market has already priced in a lot of this thing in the price, and it has become one of the favorites asset of a lot of investors over the past 1 year or so. Now, be it financialization or be it de-dollarization, which is leading to the rally in gold prices, or aggressive stance from central banks, which is adding to the party. But I think largely the kind of escalation that we've seen over the last couple of days will generally give a strong foot, but will it change the course of the market, or will it have a cascading impact for the next few quarters on gold prices? That is something we'll have to wait and watch for.
It's hard to see. So therefore, what are the key aspects that you're anticipating structurally to have a bearing on gold? And let me add silver to the mix as well, because of late you've seen silver, and of course silver is more volatile than gold, but that catch up in the second half of the year for silver was quite stellar to see. You called it. I remember that you called it, right? You were speaking about silver, and you have on this program spoken about how earlier in the year you were actually more bullish on silver than you were on gold, and that actually panned out. But let me ask you this. If you were to talk about some of the structural reasons for the outperformance of these two commodities, and specifically gold, you have central bank buying, you have geopolitical tension, you have de-dollarization, and you have safe haven. So all of these factors, and also falling yields in the US, right? So all of these factors continue to remain the same. How long does this party continue is the question that I'm asking you.
Well, thank you for highlighting that we called the silver rally, and this year also we believe that it's going to be a very interesting phase for the precious metal complex. Now, ever since 2025 started, we've been talking about a positive momentum in silver prices, and probably gold could have underperformed and silver would have outperformed. This is exactly how the year played out. But now we're getting a little fearful as the kind of momentum that we've seen into the prices. Primarily 170, 180% returns on something like silver is something that has kind of shaken the world, and I think it has led to a lot of investors believe in the confidence that will precious metal rally continue. Now, my belief is that now the tilt is now back towards gold, where de-dollarization with central bank accumulating gold, with positivity coming in from backed by geopolitical tensions, and the trend of dollar now getting a little bit pressured, with the US trade tariff tension not decelerating to the fashion with what we would have enjoyed. So these all are culminating in the gold price at this point in time. I believe that silver has had a reasonable run up, and the momentum would continue for next 6 to 12 months as well. But the question here is, will it happen post a correction, or will it continue the path it is going for the last 3 or 4 quarters? Our sense is that it could go for a pause, it could go for a time-wise correction, as we believe that a lot of financialization is happening at this point in time, a lot of FOMO buying is happening, and the so-called influencers are pushing this metal across the retail segment, which is leading to some kind of a FOMO impact and buying happening. There was a lot of buzz regards some big banks being trapped into silver over the weekend or maybe the last couple of weeks, but that has not culminated into actual short covering. So whatever we are seeing at this point in time is largely a reflux of some short covering and more of aggressive buying in terms of missing out opportunity. As far as gold goes, it's taken a pause for the last 1 month or so and has been hovering between 4,400 and maybe $4,250. Our sense is that it is reasonably forming a base and is globally and domestically as well heading for a higher momentum. We expect that gold prices go head towards $4,750 and $5,000. Why we believe so is we expect that the momentum will be driven largely from aggressive central bank buying, de-dollarization. Uh, Too much money has been chasing these assets like bitcoins, and some liquidity could be flowing back to gold as market people will want to restructure their portfolio towards more of safe haven. And this year, if there is an aggressive stance from Japan to have another two rate hikes, then probably there will be a dearth of money chasing some of these high yielding commodities and equities, and safe haven would be the only way out where gold will come into highlight or picture once again. So considering these factors, we believe from 1 2 quarter perspective, gold could be a buy on dip kind of a strategy, and probably 4,750 or $5,000 is where we see heading over the next probably 6 to 20.
Okay. So upside is there. So therefore, final call, Navneet. What is the advice that generally goes out? You would advise a structured buying of gold, and of course, you should not go out and put all of your money in one asset class anyway. But you should buy it over a period of time, is what you're saying, kind of like an SIP approach.
Well, absolutely. SIP is the only way out for precious metal at this point in time. 150% returns over the last 4 years is what gold has given. And historically, if we see, gold generally gives you a CAGR of about 8 to 9%, but this time around, it's more than a 20 to 23% CAGR which gold has given. So, of course, it is fearful, but you don't have to get left out, or you don't have to miss out or participating in this rally. Do it in a staggered manner. Maybe you can put 25% allocation at the current levels also, and any 5% or 10% fall, then you can diversify this 25 into 3 or 4 different pieces and look for opportunities. In a best case scenario, if gold prices come down to 4,000 or $4,050 from here on, it could be an opportunity to accumulate from a medium term perspective with targets of $5,000, which would be a clear 20-25% returns from the lower levels that you bought.
Fantastic. Navneet, as always, pleasure speaking with you. Hope you have a fantastic 2026.
Thank you.
Do remember, we just spoke about gold and silver. A lot of financial advisors tell you to have a maximum of 10% allocation to gold and silver, and preferably in digital form. That can be through mutual funds or ETFs or some such product. Take advice from your financial planner before you go ahead and press that button to buy. This is the end of Your Money Matters. Let us know what you think, and do stay tuned. This is NDTV Profit.